get them on, and then that's when
I
they get
know.
lost.
I just realized that I used that term getting naked, and it probably, if you just came in only at that part where I said I'm getting naked, it might have been taken out of context, but it's in relationship to where we are today with the what's emerging with these new participants, such as ratings and research. Guys, we're embarking in a new arena, and you guys are going to have a phenomenal discussion here today. I'm just so looking forward to it. I can't believe I kicked James and Shari out. I got to bring them back in. Sorry, guys, I didn't mean to bring you.
I can't believe Steve's setup there. I mean, dude, you're putting all of us to shame, man. That is some serious stuff.
So there's really, I think that last discussion finally, what I'll start with today for you guys, and you guys have a whole hour, and typically people go, why on earth would you give lawyers and broker dealers so much time? Because I think something's come full circle, and that is that, when we first got started, it was all about the lawyers and broker dealers understanding. And then people go, oh, we got all that figured out. It's pretty cookie cutter. Well, we're not there anymore. We're in a very different times. We're in times when things have gone wrong, and it's starting to, the market is maturing. So what does that mean? It means that the role of the broker dealer is not just, hey, I do the compliance and I'm out of there. Today we have, look at everyone, we have 5, 6 broker dealers here for you that are going to enlighten you on the A to Z. I'm not going to steal their thunder. It's going to be led by Elliot Chun with Rialto & Co. He is joined by Stephen Distante from Vanderbilt, an impact broker dealer. James Rowe, of course, from Entoro Capital, and without Etan Butler from Dalmore, and our good friend Victor from Capital 2 Market, and Shari, as good as always, from Rialto Market. So enjoy this session, have fun. As I always tell you, I won't come in unless I'll be the compliance alarm, but come on, we're in good hands here. Enjoy. If any questions come up, look at in the side channel there if you want to take it, if anybody wants to have a look at the questions there. Okay, enjoy.
Excellent. Thanks, Oscar. And thanks everyone for having us today and talking a little bit about the role of the FINRA broker dealer in RegA Plus. We're going to start. We've got some visionaries on the panel here today, and define what a visionary is. It's somebody that can see a future that others can't, and that have positioned themselves as a critical component of making that future a reality. Right? I appreciate everyone that's on this panel here today, because these are risk takers that have gone out and really gotten out in front of what I think we all believe is a very necessary function, and what we also believe is going to be a very new and critical way of how capital is going to flow from investors into issuers. So with that, we're going to go around the horn with some introductions, and then we'll get right into the panel topics. Victor, we'll start with you.
I've been involved in online capital formation since about 2009. Worked with a firm called Wealth Forge, for you of those that have been around for a long time, and we had a heavy impact in comment letters with Titles 2 of the Jobs Act. And I started Capital to Market in 2016 after writing the crowdfunding exemption for the state of Virginia with the Small Business Financing Authority and the State Corporation Commission. So I've had a heavy hand in some of the rules and regulations. And I've always found that RegA Plus was the true democratization of capital on the side, where it holds a lot more of the compliance factor and the regulatory factor, because despite public opinion, brokers are here to protect investors as opposed to raise capital for issuers. And we always take the line on the side of caution when dealing with private issuers, and FINRA obviously has a strong opinion about allowing non-accredited investors to invest in private placements. So having a broker dealer was an essential step to to bringing all of that together. And we've had a few Reg A pluses that have been extremely successful. So, being on the panel with all of you is more than honorable and exciting to be a part of this.
Excellent. I love the term true democratization, as well as here to protect investors. I think you'll hear some of that theme play out as we continue this discussion. Etan.
Yeah, thanks, Elliot. And thank you, Oscar, once again. Etan Butler here. I am the chairman of Dalmore Group. We are a FINRA and SEC registered broker-dealer headquartered in New York with offices nationally and active in all 50 states. We were founded in 2005. And for the first 10 years or so, we were exclusively focused on providing investment banking and corporate advisory services to private and public companies. And we still have a active institutional investment banking division that's broken up into different areas of focus today. Since 2015 or so, we've been immersed in some of the Jobs Act-born exemptions, including 506C, Reg D 506C, and more recently Reg A, and most recently CF. On the 506C side, we serve as the underwriter or the broker-dealer of record for a number of high-profile serial online syndicators of equity, many of whom are in the real estate space, but also into other verticals as well. On the Reg A side, we've been active over the last few years, very active over the last 12 months. We've been signed as broker-dealer of record over the last 12 months in over 70 Reg A offerings. We're on track for that number being over 100 by the end of the year. So that's been a very active area of focus for our firm. And most recently, actually last week, we launched a CF solution called DirectCF, directcf.com, which is really aimed to bring a direct and cost-effective Reg CF solution to issuers who are looking to take full control of their capital raise.
Love it, Etan, and appreciate how long you've been in the game, having started this in the early 2000s, and even in fast forwarding 15 years are still innovating in the space and looking at 100 type deals. That's awesome to hear. Steve, on to you.
Yes, thank you for having me, Elliot. So I own two broker-dealers, two RIAs, Vanderbilt Financial Group and Impact U Investments. I'm the founder and chairman of the company, and I've evolved over the years to really realize that I am an entrepreneur all my entire life. My first business being at 60 years old, and being able to bring capital to entrepreneurs to be able to scale and grow is really where I have my heart in this business, in the impact space, entrepreneurs, and being able to meet those entrepreneurs and understand really what's going on inside their business. What's the culture of their business? What are they going to do when the shit hits the fan? Are they going to be there with us throughout this investment? Because I've had, traditional style private placements, and you're so disconnected from. These Reg A pluses are amazing. You get audited financials, and I get to intimately know these people in a much different way. So you see to my right is Igniting Impact. That's a documentary film I did. And in the film, I actually do content about companies that we're looking to help scale and grow. So we're looking at this industry from a whole different perspective, which is being able to align our clients' values and mission-oriented aspirations with the investments that we make. And the Reg A Plus really works very well, especially from the non-accredited aspect of things. So I'm just excited to be on the panel and share, my perspective on things.
And Steve, just hearing about that passion is inspiring, and also your perspective as an entrepreneur, right? And an entrepreneur in a later stage is when you first started it. So it's great to hear that you put yourself in the shoes of the people that you're helping, right? And they're not just clients, right? To you and to many of us on this call, on this panel here, we bring that same level of passion to the groups that we work with on a day-to-day basis.
Yeah, without a
James?
doubt. So this
Go ahead.
left side of me is the SDGs. So I for 3 years, I was the UN ambassador for entrepreneurship. So I got to do through a group called EO, but we brought entrepreneurship to the UN, and then teaching entrepreneurs, celebrating them, and being able to bring capital was just like the whole next step. So that alignment with mission-oriented companies is where I live.
Beautiful. James?
Yes, thanks, Ellie. You can call me Jim. Oscar keeps calling me James all the time, but you know, he keeps, you know, and he still pronounces my last name wrong. So I'll take one or the other from him, and we'll call it a victory. But I'm still trying to get, you know, the thought of him being naked out of my head right now. He keeps
Think
talking
about the
it.
beautiful baby instead. We'll think
Yeah,
about
yeah,
the
we got to do that. We got to do that. But no, I'm the founder, managing partner of Entoro, investment bank, broker dealer. Like Etan, all 50 states plus the district as well. We have a securities platform that we acquired 3 years ago called Offerboard. Out of New York, moved it to Houston, rebuilt the tech stack. We are an RIA as well, and soon to be having one of our first registered funds get out in the market here, hopefully 2 or 3 weeks. As you know that we participated in the last panel, we also have a valuation company called Clear Rating. So we have a little bit different model than many individuals that focus strictly on the BD side of the equation. And look forward to the panel.
Excellent. And Shari?
Great. Thank you so much, Elliot. So I'm Shari Noonan. I'm the CEO and co-founder of Rialto Markets. Rialto is a FINRA registered broker-dealer and also an alternative trading system. So our team is really focused on and has built many of the ATSs out there. This is collectively our 7th. That's really our sphere of expertise, if you will. And so we've been working for the last 2.5 years to really expand our mandate and be able to bring secondary trading to the private markets. And we're so excited to begin with Regulation A. So that's Rialto.
Excellent. And finally, I'm Elliot Chun. I lead Emergence, which is the emerging technology and digital asset investment banking team under Weild & Co., which was founded by David Weild, who was fortunate enough to keynote the event today. So we're going to kick right off into this just to give a sense for the people in the audience how we're going to take the panel. We're going to start with a couple of Reg A plus observations based on SEC filings. The goal is for everyone to understand where Reg A plus is today from a numbers perspective. So there's a lot of people out here that will talk to you about from a qualitative perspective. We want to bring some numbers to this. Then we're going to talk a little bit about what a life cycle of a Reg A plus deal looks like, process, timing, and participants. Then we're going to go into a little bit, what are the options that if you're an issuer that you're facing when you think about raising through Reg A plus. While we have some of those discussions, we're going to have people on our panel play the roles for you that are listening today. So when you hear Victor's line of questioning is going to come from an issuer perspective. And when you hear Steve is going to be talking from the investor perspective. And then finally, we're going to touch a little bit about secondary markets. I know that later today, Commissioner Peirce is going to be on speaking. And so we wanted to provide our views going into that session. So with that, I'll hand it over to Shari to talk about some initial observations.
Okay, thank you so much, Elliot. So first, to provide some context, why don't I start at the private market level and then we'll drill into Reg A. But just to provide some context as to the macro shift in private markets over the last 20 years, right now there are triple the number of private companies vis-a-vis public companies, so about 14,000 private companies and around 4,400 public companies in the US. Over the last 20 years, companies are staying private longer, so on average about 8 years longer than in the past. And finally, private equity has increased 7-fold over that same 20-year time frame. So if we look now drilling into Reg A specifically, the SEC published a really helpful look-back study back in March And you know, looking at the data in there, what we see is that the year-over-year filings, 2017 to 18 and 18 to 19, rose 35 and 40% respectively. And so the years prior to 2017 and 18 was a much larger, but also on a lower base. And the amount raised has risen 44 and 52% on those same year-over-year timeframes. But what's really, really interesting, I find, from all the data looking in the report, is that you've got filings increasing, qualified filings increasing, but the amount of qualified filings, so the amount of filings that have gone into the SEC, and Jim, I think you're going to take through a really helpful flow chart. So first you file and then get qualified by the SEC. The interesting fact I found from the report was that the amount of filings that were actually qualified in the various years has risen from 16% in 2015 to 81% in 2020. So what that's telling me is not just, is this a growing market, but it's a growing healthy market, because the amount of total filings has increased, but also the amount within those total filings that are qualified has increased dramatically. And, you know, that's telling me either there are higher quality companies that are filing, that the SEC has, you know, gotten the process down to review the filings and actually qualify them, or perhaps the issuers have, you know, found service providers to help shepherd them through the process. But overall, it's really telling me that you're getting a much larger amount that's getting qualified and raised within the filings, which are also growing.
And I mean, that's fantastic numbers, as we're seeing consistently the number of companies, the amount raised. Etan, you've been kind of on the forefront of a lot of this. Can you talk a little bit about the experience that you've seen in terms of the numbers that are increasing in RegA Plus?
Yeah, I mean, I think that there's an increasing number of options that issuers have now. There's more and more, you know, marketplace-oriented platforms that offer RegA. They're out promoting their platforms. They're out promoting their issuers. There are more investors that are now, as a result, being made aware that this exists, that they have the opportunity for the first time in history to look at and participate and support some of these companies. It's been as a result of the PR campaigns from a number of these issuers and platforms. I think the word is just getting out. I think, you know, many of the business lines that we've seen as an investment bank took a bit of a pause going through COVID, right? The idea of getting board approval to move forward with an institutional investment banking deal, people were in triage mode for a while. Interestingly, the Reg A side didn't really slow down, from my perspective at least, as far as volume. Being able to give the average investor out there served up on their device, on their screen, an opportunity to look at interesting opportunities, oftentimes that they're specifically targeted to, right? To be able to see and participate, even with a credit card, makes this process, you know, I wouldn't say not impacted by these types of world events, but certainly they've been able to grow and consistently rise numbers-wise throughout, you know, even the most difficult times so far. It's still relatively new. You know, it's really become more popular as it is now, you know, really since 2017-18, right? So we're seeing now, you know, the numbers consistently surge, and I expect that's going to continue.
Yeah, and great note that not slowing down due to the global pandemic, and in fact, bucking the trend and might be even seeing more support for that. And Victor, this kind of leads into true democratization. If you were to put your kind of your 5 years from now glasses on, what kind of growth numbers are we going to be talking about in 2025?
It's a good question. I think you're going to see, based off of what Shari said, it's going to continue to grow, and even more at the pace for a number of reasons. As Etan was saying, there's more platforms out there that are operating in this way. I think bucking the trend where there was a stigma of putting your company online to raise capital early on has been overcome. And more importantly, the quality of those companies that you're seeing, where initially when Regulation A+ started, I think we all had to go through an enormous amount of vetting before we found the right companies that would be suitable for non-accredited and retail investors. And so also in the case where initially I think a lot of these companies looked at this, or some of the competitors of ours looked at it as a way to inexpensively IPO, and valuations, as Jim was discussing previously, were way off. And it gave Reg A Plus, in particular, I think, a little bit of a black eye, where these companies went to market, they had no post-market institutional support, and they were overvalued, and it created an opportunity for short sellers to come in and crush those early on investors. And I think a lot of those black eyes have been overcome by what I said before: higher quality issuers, higher quality brokers being involved, and more of an open-mindedness to this way of raising capital as opposed to before, where it was more of the traditionalist wanted to have those backdoor type deals, and now people are more open-minded, especially in the COVID area, to have to put their offerings online in some way, shape, or form.
And Steve, playing the investor role here, when you hear about investor black eyes and you hear about some of the bad behavior that happened, what's your response to hearing about, hey, there's a growth in numbers, but I'm a small investor, what does that mean for me?
I'm just kind of confused because I don't know what a broker-dealer is. And I'm not sure how they fit into this whole thing, because I could just go online and invest, right? I mean, what's the difference?
And I think that leads very well into Jim talking about what the functions a broker-dealer does put together. And Jim, I'm putting up your document right now.
Thank you very much. Just a little comment to Steve's point too. What you get that question all the time. Why do I need one? After some of the well, I don't know if anybody on the panel seen the SEC's release of finders today. Made life a little bit more challenging, and might be worthwhile, Elliot, having that question come up at the end of this panel on how it affects Reg A, because I do think today's announcement was kind of interesting, particularly in light of how to compare that also to Reg BI, which we're now subject to both on the RIA and the BI or in the BD level. So those may be good questions for you later in the panel. But just wanted to capture in kind of and Oscar, you can make this slide available to anybody. We just try to keep it high level on the life cycle. I don't want to go through and read all of this. The darker blues are more of the required. The lighter blues are things that would be options at a later state. But clearly in a life cycle of a Reg A, you have the function of test the waters. And this could be a 1 to 4, 1 to 8 week kind of process of distributing, the issuer distributing their materials to get feedback from potential investors that can be solicited through any number of ways could be social media, it could be email, it could be a number of distribution means, advertisements, etc., that get interest on a particular issuer's project and offering. So that period can be optional, but it usually is a nice way to have some feedback on whether or not your project has interest. It's not not a requirement, but it is an option to you. Then the technical side is to obviously prepare and file a 1A with the SEC. That normally takes somewhere around 30 days. You can, you want to have your audited financial statements. You want to have your documents ready in a proper manner to be filed with the SEC. Really, the next stage then is to receive and interpret the SEC comments. That can take, who knows how long that can take. I've seen it take very little time, and then other times, depending on the quality of the materials and the issuer, that can actually take a lot, depending on how comprehensive it is. Sometimes it's the legal team, the audit, whatever you can do to make the SEC more comfortable, usually expedites the process. So
and James, in these first three buckets, talk a little bit about how the BD gets involved here.
Well, the BD is in a Reg A is primarily focusing on the function of due diligence and compliance activities. Depends on when a issuer brings in a BD, and that's always up for debate. Some have had troubles; they'd never bring one in, but it depends on if you're bringing one in early and if you're doing something as just a placement activity, or you've hired a broker dealer, securities operations for more of a full investment banking engagement, which would be to kind of shepherd that process all the way through. So it depends on what you're asking the BD to do. Like I said, it's usually broken down into an engagement, a full engagement program, which is an investment banking, and that's a process where you're really working side to side with the lawyers, with the team, et cetera, to get the materials in order. Or if you're just playing the part of just due diligence and compliance, which would then get you to just being a placement agent. So there's really multiple functions there that the BD can participate in. Did I answer your question, Elliot? Go ahead.
And Jim, as my role as the issuer, are there any additional costs when you add a broker dealer, or there's any additional process that would go into that? And I'm talking about a 5110, if you could go into that, where that's that additional process when you have the broker dealer. So the cost and the process of having that, where if you don't have one, you might not have to go through that.
Yes, good point, Victor. There's, when you bring in a broker dealer for anything, and like I mentioned before, whether or not you're doing the full or what have you, you have, you've got to file that comp structure with FINRA, right? So you do have to put that out there. You have the added cost of the due diligence aspects of it, and anything that the broker dealer is going to do in addition to from a preparation standpoint as well would be at an added cost.
Thanks. So I think what on the 5110, that's what they're talking. So simultaneously, when you do get qualified with the SEC, you also have to get qualified by FINRA under the broker dealer for the compensation,
Correct.
right? Okay,
Correct.
got it.
Good point. Thanks, Victor.
Thanks.
The next section would be really the file offering statement with the SEC. This is where you figure out whether or not you're meeting the requirements of a securities exchange. You have the listing application, etc. And depending on what the role of the broker dealer is, again, whether or not it's a kind of a full process or a placement process, this can alter on how much support a particular issuer receives from their BD. And then really on the last side of the equation is the this qualified offering statement. The issuer and the placement agent in this particular situation, the broker dealer, is lining up the interest from potential investors in the pre-qual period, and work to get the conclude to get the full qualification. So those are the main points of the life cycle. Obviously, a lot of things can alter the timing. It can be the calendar, the time of the year. It can be SEC backup. It can be the preparation of the issuer. There's a number of factors that go into the actual speed of the process, and some things you can judge, some things you can't. And to Etan's point, there's been a lot of activity in the Reg A space from the SEC where we've slowed down in other areas, they actually had more opportunity to process the Reg A activity a little faster. So you see, you know, the variability can vary between 30, 60 days on this kind of timeline and life cycle.
Yeah, and when we think about these life cycle steps here, in the back of my head, if we think about what the fundamental reason why each of these steps exists, it's to protect investors at the end of the day, right? Isn't that right, Steve? When you think about these steps from an investor perspective, these all exist to protect the end investor.
That's my experience, of course, and we play a very vital role in that process with suitability, not putting too much of our assets in any one particular investment is clearly something that you don't get when a broker-dealer is not involved. I mean, there may be a click the box or so, but the broker-dealer actually is the ones who are able to help with that, you know, the determination of whether or not the investment is appropriate.
Great. If we move a little bit to the next phase, which is, okay, now that we know what the life cycle of the Reg A Plus deal is, what are some of the options that someone who is seeking to raise capital in Reg A Plus form must consider? Etan?
Right, so you're a prospective Reg A issuer. You have an important decision to make and you have some options. One is you, assuming you want to conduct your Reg A offering through a regulated entity, which I think most of us, and I think many of the securities attorneys that I know would advise for a number of reasons. You have two choices. One is you could list your offering on an ever-growing list of marketplace-oriented platforms, right? And there's 6 or 7 very big ones that everyone knows the names of, and there's many more popping up. The model there is, and you'll see, you know, we have 200,000, we have 300,000 investors that are ready to pounce on your offering, sign up, pay us 7 to 15%, and have a lot of hope and faith. Now, it works for some. It definitely doesn't work for everyone. The alternative, and by the way, when an issuer eventually realizes, and I think most of them do, that, hey, this is my offering, ultimately the responsibility of promoting this offering and assuring the success really falls on my shoulders, not on listing on a third-party platform and hoping that the majority of my offering is raised automatically just because it gains traction amongst dozens or hundreds of others. The alternative is to do it yourself and to work with a BD like Dalmore that could set you up with your own landing page, that could set you up with your own Invest Now button so that you become the sole beneficiary of your own marketing and promotional efforts. This is very important and at a fraction of the cost in joining the platform, right? So the idea of being able to take control of your own offering. Yeah.
Etan, would you just take a step back, because you made a really good point. In the beginning of the as an issuer, you said a term that we would understand, but maybe issuers do not. Let's talk about the difference between broker of record or executing broker fee, and then what you just touched on, where if you list on a platform and you're looking at a full placement fee, and even though you're going to end up doing a lot of the heavy lifting. Could you kind of just get a little bit more granular on that?
Yeah, so the broker-dealer of record option is to have a broker-dealer that's conducting your offering for you, that's registered in all 50 states, that's doing due diligence on the issuer, running bad actor checks on all the officers and directors, running diligence, making sure that the advertising is acceptable and disclaimers are on there, making sure that the suitability attestations are collected, making sure that KYC and AML and suitability are all in place and stored for the regulators, right? That's a buttoned up way for an issuer to approach making their offering available to the public, right? You could hire a broker-dealer of record. That's the role that Dalmore plays. Very cost-effective solution for having a broker-dealer involved. Or you could list on a consolidated platform, and you could pay much higher fees and commission fees in the hopes that they're going to sell your offering. It's our belief that there's really no established syndication and distribution strategy for Reg A, like there is for Reg D, right? So if I have a Reg D 506 C, and I'm the broker dealer, I could then build a syndicate of other broker dealers. Each has their own kind of brokers, and each of our brokers could call their high net worth, their family offices or institutions, saying, "Hey, we have this deal, $100,000 minimum. Are you interested?" For a $500 investment or a $1,000 investment, it's just not happening, right? So the only real syndication and distribution strategy, in our opinion, and based on all the offerings that we've seen what works, we've seen what doesn't work, is a solid marketing and promotional campaign designed to steer as many eyeballs as possible of folks who might care about what it is you're doing on your offering. Let them decide. Let them make the decision if it works for them. And that's why marketing and PR is so critical. So that's the difference between like a broker dealer of record that gives you that 50-state blue sky access, that does this diligence, that serves as a regulated entity for your offering, versus hiring someone and paying them the traditional investment banking fees, like the 7, the 12, 15% that involving equity and warrants. If you add them all up, that's really kind of like a placement agent structure. I don't think that's an appropriate structure to use for most issuers, although there are exceptions.
And that fee as an executing broker fee, I know the industry average is typically right around what?
It's 1%. Typically, if you just serve as the broker dealer of record, right? So that's really what you're looking at. That's how most of our deals have been structured. It does vary if it's a very small offering, or if it's going to be a taxing process on our compliance department, that'll be indicated. We're also seeing a lot of which some of the attorneys mentioned before, these series issuers, right? So they're getting approved, or they're getting qualified for the full $50 million, and then they're accessing that $50 million in the form of different series, different assets that they're offering out to the public, right? So that's having a broker dealer involved in that process is very helpful as well. And we're seeing a big trend amongst folks that are building communities of investors. Like, some of our clients are in the racehorse business, collectible business, real estate business, wine business. It's something that we're really seeing the numbers increase. It happens to be my favorite use of Reg A, because it's like, you're building a loyal base of individuals who are, you're constantly showing them new products. I think that's great. And I think that, that goes into a further emphasis as to why having some type of a secondary process ultimately established for them. Now I have all these assets. Okay, great. How do I trade them? How do I list them? What do I do? We help these issuers. We enable the issuers to have a internal secondary process where they're able to bid and ask amongst themselves, amongst existing shareholders or account holders or members of that ecosystem. The next step, and I know some of you, Shari, I know you're working on this as well, and a number of other folks, is to have an ACS where you're listing these shares out to the public, so that everyone in the world could kind of go and browse some of these assets. And I think that's the direction this industry is going, and we welcome it.
Yeah, and I think one of the most powerful comments that you had mentioned was really taking customers and turning them into investors into your business. And that is something that loosely public markets was trying to build that connection, right? You're a publicly traded company. I use X product. Ooh, I can be an investor in that product. Well, there's a lot that goes on in between there, and to get to that point. Here, we're bringing that direct connection, or that bond building, and making a customer an actual investor much, much, much earlier, and allowing truly that user / customer / potential investor to grow with the company. And I guess when there was one, when you were talking through that, do we see an environment where, yes, there's always going to be the option to do it without a quote unquote broker dealer, but are we going to see a situation where why would anyone want to take that risk on their own?
You know, you're going to run into some issues. You're going to run into some state issues, most obviously, right? You're going to make a choice. Look, if you don't have to pay the broker-dealer fee, then why hire a broker-dealer? I get it. Most people when they think about a broker-dealer, they think about the typical investment banking fees that they're accustomed to with other securities exemptions like Reg D. 7 and 7, 6 and 6, 8 and 2, 5 and 10. That's expensive. That doesn't work for everyone. That's worth hiring an attorney to go fight state by state and go through that rigorous process to try to prevent this. That's worth you worrying about KYC, you worrying about suitability attestations, you worrying about your own advertising, perhaps. But if you have a solution to hire a broker-dealer of record that could do all that for you and that could get you access to all 50 states that they're registered in essence with a box check with the 1A application, I think it's a no-brainer. And I think I think most of the folks in the industry agree with that at this point. So I think that, you know, it's all a matter of, you know, how cost-effective the risk-reward involved. And when you factor it all together, I think this is the right solution.
And Etan, also, are there any, I mean, I know we do this with our clients, but are there any ideas that you give them as far as structure of securities to simplify, to make it a little bit more understanding, to protect the investor, but also to protect the issuer? You want to touch on that a bit as an issuer question?
Yeah, I tell them, absolutely. I tell them a couple of things. You know, remember who your investor is. This is John Doe, 10:30 at night, sitting in his robe, looking at his iPad. He gets a alert on Facebook because he was browsing something and he sees an interesting opportunity. What's important to him? For his $500 that he worked so hard for, that he finally has the opportunity to invest in this cannabis company. It's number one, do I understand it? The structure. If it gets too complex, you're going to lose them. Common equity, preferred equity, something that most people can relate to and everyone's aligned with. That's number one. Number two, does he feel like this could be worth something significantly more down the road? Does this resonate to me? Do I want exposure to this? That's number two. Number three, could I afford it? Could I put it on my credit card? You know, and these are the things that are going on, in my opinion, from the average investor's perspective. They're not necessarily even able to understand fully what valuation means, right? It's a very different conversation than we're having when venture capitalists are looking at this. It's important that you're fair with your valuation, but it might not be amongst the top 3 or 4 or 5 factors that cause someone to swipe a $500 investment to become an instantaneously shareholder in your company, right? So that's how I would look at that.
And Steve, when you think about kind of investor protections and you think about some of the things that Etan and Victor are talking about here, does that make you feel good, bad? What's the reaction?
Well, I think the broker-dealer aspect seems to be it's a more protective realm for the client. The part that gets confusing to me, acting as my investor perspective, is advisors often are trying to throw these things into RIAs and charge a fee. And what I keep seeing over and over again is the SEC or the states coming down on these investments because of their illiquidity. And I'm certain that the BD fits in much better in that relationship versus this asset going to an RIA. I'm just not sure if other people are, if you're willing to go there, Elliot, if other people have had experience with that as well.
Yeah, certainly. I'll open that up. Did anyone want to jump in on that question from Steve?
Yeah, I will. You know, we work, as a matter of fact, we have a selling agreement with Steve, so we work with some of his IAs. And it is, there's one, the custodians themselves, you have to get the securities approved to be held in, depending on the size of those custodians. That can be extremely onerous, and having a broker dealer help you through that process can be extremely beneficial. But on Steve's point, because of Reg BI, these IAs have to be extremely careful what they recommend to their clients and making sure that they are suitable for those investor profiles and their overall investment goals. So where somebody like Etan was talking about previously, and I know I'm going out of my issuer question role, but the suitability is a big deal, more so with the IAs as opposed to somebody who gets, like what Etan was saying, something pops up on and they want to invest in the next hemp drink that they saw on Facebook and want to throw $500 in it. It does add that level of complexity and that level of scrutiny from the regulators and the state regulators, depending on those investment advisors. So having those resources and doesn't necessarily mean that they're going to be able to place those securities into those investor portfolios if they're not fitting for their investment goals.
And that kind of leads into a key point that Steve had mentioned, and also Etan, about liquidity, which is probably the most misused term in our industry, because it probably means 7 different things to the 7 different people on this panel. And so Shari, when you think about secondary markets or liquidity, how should we be thinking about it from a Reg A Plus perspective?
Absolutely. Thanks, Elliot. So first off, there is a panel on secondary markets at 5 o'clock. So for more details, I'll give a very broad overview. And then for further details, you can go and attend that session if this is piquing your interest. But liquidity is, a often misused term in Reg A's. I came from the equities market, and micro cap was $400 million. So it's very difficult, public equities market. So it's very difficult to find liquidity. You're not going to find liquidity in a $10 million offering. You're just not. It's not going to be a robust liquid market. So that's sort of level setting what we're talking about when we're talking about liquidity. However, Rialto is an alternative trading system, and our goal is really to reduce the friction. So today, if you would like to transact and transact in the private markets, it's very heavy and laden with friction, and also there is somewhat limited access. So, I grew up in the public markets again, and really lived through the equities market moving from voice to electronic. And back then, while public equities had a platform, it was still somewhat restricted, mainly to institutional investors. And yes, as a retail user, you could call your Merrill broker or EF Hutton, pick the broker of record back in the 80s and 90s, and you could transact, but it had a lot of friction, over the phone. Really, the growth and expansion of the equities markets came when we started allowing retail to enter the market more directly. And back then, for those of you that remember, you could log on and maybe buy or sell your securities for whatever, $30 a trade back then for E-Trade and Schwab. Now it's pretty much zero. It's not free, nothing's free, but there will be zero commissions associated with it. And really what that's done is expanded the markets. And so what we're trying to do at Rialto is really build the beginning of a vibrant market for private securities, specifically Reg A, and really expand and increase the access of the network. So that will in turn create a larger marketplace and a more robust marketplace, but still will not provide unlimited liquidity for a $10 million issue.
I love build the beginning of a vibrant market. We all hope that it is vibrant. We have 10 minutes left, maybe a couple minutes less than that. So if you do have questions, drop them in the chat. We'll get to them. I'm going to go around the horn and ask 2 questions while we're waiting for that to the panelists here. The first is giving a sense of the people on the phone where we are from a timing perspective. I'm not going to use the baseball analogy, but if we do use 4 quarters in a game, at what point in this game are we? And Shari had kind of mentioned the 80s and the 90s in equity trading. So things were very, very, very different back then. Can you give us a sense, each of you, on where you think we are from a timing in the game perspective? I'll start with Victor.
Yeah, it's a great question and asked a lot. And I think we're as a yeah, I almost like the 9 innings, really. I think it's a little bit more descriptive as opposed to quarters of where we are. I think what happened in the first rollout of RegA Plus in 2017 was we got thrown out on first with some people that misused it and gave it a bad name. So it slowed down the growth impact of where we could be in the fourth or fifth or sixth inning, where I still think we're more in the second or third. And to Shari's point of liquidity, having the right issuers that have that exit strategy where they're capable of getting there, whether it be through acquisition or IPO, is going to be more and more based off of, I think, in my opinion, not necessarily the secondary market at first while we're still building the primary, but the more so that the qualified companies are better suited to use RegA Plus and better positioned to exit more quickly as opposed to an individual secondary buyer selling on a secondary market at this point. But I appreciate the fact that she is creating that because it's something that's going to be heavily needed very soon.
James?
I'm with Victor. I'm in the baseball analogy. I'd say we're second or third inning as well. I totally concur with everything he said. But my thing is, are we going to have some kind of black swan event when it comes to a RegA or just from a market situation to slow it down? That would be my only question.
Steve?
Well, for me, it's a whole different world. I'm totally aligned in the impact space. I say first inning. I'm doing my first virtual reality aspect. So inside of 5 minutes, either on a Google Cardboard or some sort of VR platform, you can see really deeply in an immersive way, just a visceral connection with that company. And this space really serves that so well. People being able to have something super unique, great opportunity, and the firm and their advisors, the advisors being able to reach out and connect with clients in a whole unique way is where I'm coming at it from. For me, it's first inning.
And I just want to reiterate that bond that you're building by taking people that are aligned to your vision and share that passion and being able to take them on the journey with you at an early stage is just so powerful for what RegA Plus can do. Etan, where are we in the game?
We're early, and it is exciting, and it is moving fast. And all of us are starting to see what's working, what isn't working. Marketing companies are starting to build data. What's working, what's not working? How much does it cost? What's the conversion ratio? What should I expect? How do we advise clients? What's the right valuation? Securities attorneys are dealing with questions that are fluid, with regard to international investors. These are not necessarily all black and white things. And from a regulatory perspective, there hasn't been big headlines of fraud. That could happen when you open up markets like this to new companies in mass that are launching new things and one after the other. In my opinion, eventually something is going to happen, and not everyone's going to be happy, and that's going to be a learning experience for us. And I think that just adds to the importance of using a regulated entity, using a broker dealer, making sure that there's someone, a third party, that's doing the bad actor checks, that's putting the diligence down, that's making sure that all of the investor suitability attestations, that's making sure that all the IDs are uploaded, that the subscription agreements are signed properly, that the advertising is what it should be and not what it shouldn't be. That's important to have organized and buttoned up, I think, at this point.
Yeah, and I think a lot of our friends that have been on these panels earlier almost most, I would say, are agreeing that they won't work with issuers that aren't working with some broker dealer in some way, shape, or form. I think everyone, for the sake of the investors, agrees with that. Shari, where we are in the game, then Oscar, I'm going to flip everyone for one more question, which will be really quick, and I'm passing it back to you.
Okay, great. I still think it's very early in the game, and I just want to clarify one of the questions that came up from Derek. when I talk about liquidity, really what I'm talking about is liquidity a la IBM, where there's a very full depth of book. There are lots of quotes, lots of people standing there ready to buy or sell, or liquidity with less friction in it, where today, if you are an investor in a RegA, there was another question from Derek talking about if you're an investor today in a RegA security, where can you exit that investment? And there are, like Etan mentioned, internal platforms where you can buy or sell from an existing shareholder. And what's just happened, we were actually the first to get this mandate across all private markets. There are now ATSs that are coming to market that allow you to transact, buy or sell Reg A securities across a large network. So it really expands that access. And so while, if you have a $10 million issue, yes, you can come onto the Rialto ATS, that's absolutely fine. Just don't expect there to be a ton of activity in that security, because there won't be. However, the friction associated with exiting that position will be diminished greatly.
Shari, would you agree that a good analogy would be exactly what's going on sometimes in the OTC pink sheets, where you might list on the security, but there's just no market for it?
Well, and I would actually say yes, but before entering this market, we built an ATS for the corporate bond market. And in a very similar fashion, it's a very dispersed market. There are lots of different securities. IBM could have 100, 200 issues of bonds, but the key is in the ATS, or the execution platform, really bringing together that expertise in terms of building the network, as well as building the functionality and the facility to highlight your security to someone who would be interested in buying that security.
So everyone on here on the line, on the panel here is they are innovators and entrepreneurs. It's important to know that these aren't like people that are untouchable. In fact, we welcome people to reach out to us and have conversations. We've been in your shoes, both as issuers, as investors. So please reach out to us. I know that we only have 90 more seconds. We have the pleasure of Commissioner Peirce being on. So for the people on this panel, in less than 3 words, what is one thing that you would ask her, and maybe Sarah can get that through? Victor.
Well, that's really putting me on the spot there in 3 words.
You already used them up, Etan.
I'm done. You stumped me on that one.
75 million.
Love
Bravo.
it. Shari?
Bravo.
I was going to say 75 million, but so you stole the words out of my mouth.
Nice. Jim?
Get rid of Reg BI.
Which we didn't touch upon. Get rid of Reg BI. And Steve, finally.
Not an easy space. I'm going to pass. Thank you.
I agree. 75 million. Let's get it going. There's no reason why we shouldn't increase these levels. And so thank you, everyone, for the role of the FINRA broker dealer panel. We really appreciated being with you. And Oscar, that's 4:15 on the nose, buddy. Let's go.
Well, I give you guys a whole hour, and I hope everybody heard it from the beginning. Team sport. We're now moving into a different iteration. We're just at the beginning. You guys call it a game. I call it a journey, because a game ends. This doesn't. This just keeps going and going. And Etan said it best. We're learning along the way. And the critical piece here is that we need the broker dealers involved in that discussion, along with the lawyers and everybody else sharing that information. And so we can bring more transparency to it. We're seeing a different type of companies now asking for Reg A. And we're going to meet some CEOs here coming up. And they're asking different questions that they asked maybe 2-3 years ago. 2-3 years ago is a novelty. Wow, it's new. I want to be the first. And when you're the first, you don't ask many questions. You trust your advisors and away you go. And I'm sure all of you are going through this. People are asking, so if I use this, what's my return? And what does that look like? What am I going to see daily, hourly, and all that? So it means all the pressure is back on us. We made the promise. We're building the roadblocks. Now we just got to make sure that we can deliver that. And that's a great thing for the industry. I thank you so much, Elliot. You did a great job. James, Etan, Victor, Shari, everyone, thank you so much for your time today. Really appreciate it. Looking forward to talking to you guys very soon. Take care.
Thanks, Oscar. Thanks, Elliot.
Thanks, y'all.
Thanks, everybody.